My name is Mark Bolger, and I'm joined here by Greg Yotis, who's also another director of sales for the life annuity, final expense, and long-term care. This is all of our contact information, direct extensions, and email addresses. If you guys ever have any questions, Greg and I work in the life annuity and final expense department, so we can always help you out with anything that you need. Today's presentation probably going to be, relatively brief, but we're going to go over Aflac and their simplified issue final expense plan. This has actually been one of our top-selling products since this has hit the market about a little bit less than 2 years ago or so. So lots of great things that we'll talk about with Aflac, show you why this is something that you should be offering to your clients, and kind of just go through a little bit of the product details, some underwriting guidelines, and all that good stuff. So first off, Aflac, if you do contract with them, it includes all of these products that you see on the screen here. So obviously the final expense, it's going to include the Medicare supplement, dental, vision, and hearing, as well as senior hospital. So that's actually like the Medicare Advantage portion. So it doesn't require you to get separate contracts for each of the separate products. It's all included in one. And obviously you can see, just a little bit of a summary of each one. The final expense, which we'll go over in a few minutes. Medicare supplement, they have plans A, F, G, and N. Household discounts up to 10%. Part D is also available, and that was just launched back in August of 22. Dental, vision, and hearing, guaranteed issue. They have 4 dental benefit levels, 2 vision benefit levels, 2 hearing benefit levels, and then a little bit more of that Medicare Advantage information as far as how Aflac works should be available on our website. You can also, contact Pinnacle. We can get you over to one of our health sales directors who's going to be more well-versed in those products outside of the final expense. Okay, so here's just a brief summary of how the final expense plan works. The age ranges, the maximum death benefit amounts. So if you notice, they have a level benefit, and then they have a modified benefit. Okay, now for the level benefit, they actually give you some leniency here because they offer a preferred rating and a standard rating, which are both immediate first day coverage. The only difference would be standard, allows the client to maybe answer one health question as a yes, without getting knocked out like other carriers would do. So, and we'll go over what, the leniency as far as, what underwriting criteria that they're lenient on that other carriers are not, which will make it, that much better for you to offer to your clients. So preferred and standard, we got the full level benefit, with face amounts ranging from as little as $5,000 up to $50,000. Now it is tiered, in different age groups. So minimum issue age for the final expense is 45. So if your clients are between 45 and 55, they can actually get up to 50,000. Okay. If they're between the ages of 56 and 65, the max they can get is 40,000, 66 to 75, 30,000, and then 76 to 80, 25,000. So that's one important thing. So this goes from ages 45 to 80. A lot of other carriers out there might be like 50 to 85 or 45 to 85. So just know that this does stop at age 80. We do have other products and other plans available. If you do have a client that is, 85 years to, I think the max we can do is like 89 with one of the companies. So if you come into that, just give us a call. We can certainly find a different company for a client like that. Okay, and then the modified plan. So this is, again, always going to be determined by the answers to the yes/no questions, which we'll go over in a few minutes here. But the modified would be offered if the client were to, answer more than one health question as a yes. It wouldn't necessarily knock them out, but they can still get some coverage. And the only difference between the modified and the immediate benefit is the modified is going to give you just a limited death benefit for the first 2 years. Okay, so and it could be because your client maybe recently had a heart attack or stroke, and that's what's preventing them from getting an immediate plan, and that's what's putting them into the modified plan. Okay, so if death were to occur in the first 2 years, the beneficiaries are going to receive all of the premiums that the client has paid into it, plus 10% interest. So there's really no financial loss to the client or the payer of these policies, because their beneficiary will get all that money back plus interest. And again, only if death occurs in the first 2 years of the policy. So if they were to pass away in year 3 or any time after that, they're going to get that full death benefit that they applied for. Okay. Another little feature about that, let's say if they were to pass away due to an accident in the first 2 years, they're not going to get just return of premium plus interest. They'll actually get that full death benefit. Okay, so that's a nice little feature in there. Kind of gives clients a little bit more peace of mind. Now, with the modified benefits, it's going to be limited. Still minimum age is 45, but you'll see the max age is 75, and we can only get a max of 25,000 if they're between 45 and 55, 20,000 for 56 to 65, and then 15K for 66 to 75. Again, if you have a client that's 78 years old, or if they're over 80 and they need a modified plan, we have other carriers that will have a larger issue age for that. Okay, so riders, it's going to include for no cost an accelerated death benefit rider. So what that means is an accelerated death benefit rider would cover any critical, chronic, or terminal illness. So if your client is diagnosed with critical, chronic, or terminal illness, they have the ability to accelerate a portion of that death benefit. For example, let's say they have a $30,000 death benefit. They come down with a critical illness, which could be something like a heart attack or a stroke. They can take up to 50% of that $30,000 death benefit in one lump sum that the insurance carrier would send to them within 24 hours. So they could get up to $15,000 or 50% of $30K for this example. They could take out less than that if they want. They could take out $1,000 if they want. Whatever. It just is available for them to help pay for any of these, the healthcare costs for a critical, chronic, or terminal illness. That can, kind of be used as like a long-term care supplement, although it's not really, 15 grand isn't that much. But again, it can really, help the client out, especially, if they come down with one of those illnesses and puts them in a bind. They have that ability to do that. They don't have to elect it. If they want to just continue, make sure that death benefit is still the same, no problem, but it is available to them for no cost. The accidental death, that is an extra cost. It's typically just a few bucks extra, and what that means is it's going to double the death benefit payout if at any point during the policy the client passes away due to an accident. So let's say if we had a 45-year-old who had a $50,000 policy, they purchased the accidental death benefit rider. God forbid, they get hit by a car or something that's an accidental death. This would now pay out $100,000 as opposed to $50,000. Same thing with any of the lower death benefit amounts. $25K accidental death would pay out $50K. Okay, so nice little feature there. It's available, and this is actually I think a little bit outdated, this sheet here, because it actually is available in all states except for New York right now. So and Guam, Puerto Rico, and the Virgin Islands. But before, I think California and a couple other handful of states were still waiting to get this approved. That has since been approved like over 6 months ago. So just figure every state except for New York. Okay. For the payment types, they're going to accept an EFT, which is electronic funds transfer, or the client can pay by check, and they can do that for their initial premium as well as ongoing premiums. A lot of times, sometimes clients like to pay their first premium with a check and then have the remaining premiums come out of a checking account via EFT. So no special payment plans like credit cards or Social Security debit cards. Unfortunately for this, we do have other carriers that do accept that. So if you do run into a client that only can pay with a Social Security debit card or a credit card, then we can find a plan for them. Okay. Production-based commission level. So this is basically saying, we have our certain street level commissions that we can offer agents that don't have any like proof of production, and that is going to be 113% where we can start agents off at. Now, if you do have proof of production, we can essentially get you up to the highest level that they'll offer based on how much production you have. So let's say if you have $250,000 of issued annualized premium in the last year, then we can potentially put you up to, let's say, maybe like 125 or like 130% level. The more production that you have, if it's like 500,000, we could get you like 135, et cetera. So the more production that you have, the higher we can put you at. But we'll have to have a conversation like that one-on-one, and we're going to need some sort of proof of production to send over to the carrier as well. Okay. This just talks a little bit more about the riders I just discussed there. The accelerated death benefit rider, where it's going to pay up to 50% if they come down with a critical, chronic, or terminal illness. Accidental death benefit rider. You got a children's term insurance rider, where we can insure up to, I want to say, 9 children, and we can get a maximum of $10,000 per child, and that's typically it's like $2-3 extra a month to add that child rider on there. But essentially, that's going to cover the child to the age of 22, where they can then convert it to a whole life policy. So that is a feature available. Since this is a final expense policy, that means it's a small whole life policy, so it is going to accumulate guaranteed cash value. So that means that your clients can take out policy loans tax-free up to the amount that's in their cash value. So normally it'll take maybe a couple years for that to show maybe a few $1,000s in there. Usually the first 2 years is going to be very minimal with the cash value. But again, the longer they keep it, the more cash value will accumulate, and they can use that again for any type of emergency. Doesn't matter what they want to do. They could use it to go on a vacation if they want. They don't have to explain what they're taking it out for. Okay. Some other things in here. We do have reduced paid up insurance. So, we can use some of the cash value to help purchase a paid up policy. Sometimes it'll either be paid up with a reduced death benefit, or we can have it at that basically the same death benefit. It all just kind of depends on when the client wants to do that. We have extended term insurance as well that we can use with the accrued cash value to help purchase a policy with the same death benefit with a shorter period of time. And then we also have the automatic premium loan. So I always get this question a lot from agents who are like filling out apps. They say, well, what's the automatic premium loan? What does this mean? That means that, let's say if your client, they have the policy for a few years, or if they have it for a few months, and the carrier goes to draft the premium, but the premium comes back as insufficient funds. Instead of putting the policy in a lapse status, what they'll do is they'll take the premium out of the cash value that's accumulated to pay for that month's premium. And then it just kind of gives your client a little bit more of a cushion, a little bit more leeway, so that they don't have any back premiums to pay. So this time they're not having to pay double next month to catch up. Okay, so that's a nice feature built in automatically for no cost there, and just kind of helps ensure that the clients are going to keep the policy in force. So here are just some sample preferred premiums, and then we have like some sample standard premiums as well on the next couple pages. But this just shows you how it compares to some of the other top carriers that are out there. You'll see this name Tier 1. So what Tier 1 is that Tier 1 is Aflac's direct underwriting entity. So prior to Aflac releasing this and the Med Sup plan, they only used to deal with the groups and businesses. They didn't have any individual uh, insurance plans to offer. So in the last 2 years, when they first came out with this, they have this other separate company called Tier One, who is just does the individual policies as opposed to the group policies. So sometimes you'll see Aflac slash Tier One, again, same company. Um, just to avoid any confusion there. So you'll see Tier One Aflac is coming up, within a few dollars of the top companies here. Now, I will say, for this example, for the 60-year-old male, you see Transamerica and Mutual of Omaha coming in a little bit cheaper than the Aflac. However, Mutual of Omaha and Transamerica, their underwriting is going to be a little bit more difficult than Aflac, and I'll show you guys on the next slide here. Where, like, let's say if you had a diabetic, Mutual of Omaha, there's a good chance they could decline it or get them a graded plan, whereas Aflac, we can get them a preferred immediate death benefit plan. So a lot of times this is just like, this is just really for show here. Everybody, each client has different health issues, different concerns. So, if we do come across somebody that has some of those minor health issues, a lot of times you're going to see Aflac is going to be the number one choice, like by far. So, so this next page here, this is actually taken from the application, and I actually attached this as a handout to this webinar, so you can actually download these under the handout section. And this is basically like a little underwriting cheat sheet. I included this as well as the full paper application, so you can see what the health questions look like, and you can see what the application looks like. The paper application that's attached to this is everything that you're going to see if you do the e-app. So I always like to go over the paper app just to see, make sure there's no surprises in there, so that when I go to do the e-app, it's literally going to be all the same pages that are taken from that paper application. Okay, so with this cheat sheet here, you'll see when we get to the application, they have Part A, Part B, and Part C health questions, and I think it totals up to like a total of 12 maybe. But Part A, and it's going to tell you on the application, it says if your client answers yes to any of the questions in Part A or any of these conditions in Part A, it says stop right there, do not continue. The client is not eligible for insurance. So at that point, we can maybe switch over to a different carrier that maybe has a guaranteed issue or something like that. Okay, so with this cheat sheet here, you can say, hey, anything in Part A is going to ask if my client is currently, and I'm not going to go through every one of these, but just a few, like currently in a hospital, or are they currently in a nursing home, psychiatric facility? Do they require use of a wheelchair, mobility scooter due to some chronic illness? In the last year, have they been used to or advised to use oxygen equipment, excluding CPAP for sleep apnea? Have had kidney dialysis, any medical procedure or surgeries where we're still waiting for those results? That is going to be declinable. If your client has ever had any of these conditions listed here, such as like a organ or bone marrow transplant, tested positive for HIV, ARC, or AIDS, ALS, sickle cell anemia, Alzheimer's, dementia. Okay, so these are pretty serious conditions, and you're going to know that pretty much right away when you're talking to the client if they have any of these. And then finally, in the last 2 years, were they diagnosed with or received any treatment for any type of cancer? And that's going to exclude basal and squamous cell skin cancer. So if they have any of these conditions in Part A, they are not eligible. All right. Now, if we go up to Part B, let's say the client can get through everything on A. We go up to Part B. We just ask them, hey, in the last 2 years, have you received treatment for alcohol abuse or drug abuse, used illicit drugs, convicted or pled guilty to a DUI, had complications of diabetes? That means like they would have to be hospitalized. Could be like nephropathy, or there could be like an amputation. That would be considered complications of diabetes. And then also in the last 2 years, any treatment for like a kidney disease, right? And then in the last year, have they been treated for, angina, which is chest pain, heart attack, cardiomyopathy, any type of heart or circulatory procedure or surgery, a stroke, TIA, aneurysm, or brain tumor. Okay, so if they say, nope, no, everything's good, haven't had any of that stuff, perfect. You can move on to Part C. Now, let's say if they do have something in Part B, that means that they can only qualify for the modified plan. Remember, that's only going to give you a limited death benefit for the first 2 years, and then they get that full death benefit going forward. So let's say you get down to Part C, client doesn't have any of the conditions in Part A or B. We ask them, hey, in the last 2 years, have you had that, chest pain, heart attack, cardiomyopathy, any type of heart circulatory procedure or surgery, stroke, TIA, aneurysm, or brain tumor? Or have they ever been diagnosed with Parkinson's, multiple sclerosis, systemic lupus, COPD, chronic bronchitis, emphysema, or any other chronic respiratory condition? So what I love about this is Part C. If your client says, well, yes, actually I have multiple sclerosis, or you know what, a year and a half ago I had a stroke, that's okay. If they answer yes to any of these in Part C, they can still qualify for the immediate benefit, but it's going to be the standard rating. Okay? So the only difference between standard and preferred is the price. It's just that standard's a little bit more expensive. Okay? Now, if they go through Part A, Part B, and Part C and say none of this applies to me, then they can potentially qualify for the preferred rating, which is going to be the best that they can do, right? Okay, so I love using this cheat sheet. It's great. If you're talking to a client over the phone, you can quickly go through these. You can also ask them the health questions that are on the e-app or paper app, but I sometimes find this a little bit easier. I've even sent this to clients as well and say, hey, does any of this stuff apply to you? They'll look through it and give you a call back and say, hey, I went through all the conditions, none of this applies to me. However you want to do it, it's just a nice and easy way to really get a good gauge on what they're going to qualify for. Okay, so let me just switch over, and then this over here is just the application. You can use this for all states. I've attached this as a handout, and again, this is going to have the health questions, the yes/no health questions for Part A, Part B, and Part C. So it's just about 2 pages or so, and it all pertains to everything that we just saw on this little cheat sheet right here. Okay, and then there's also a separate cheat sheet that I've attached as well to the handout there as well. Okay, so I know a lot of agents, you may have recently gotten contracted with Aflac. You may have just realized that you can offer the final expense as well. So I would just, advise you to, give us a call. Let us know if you're working on a case. If you need us to do a walkthrough of the Aflac website, we can certainly do that with you. Although it is very, very self-explanatory. Once you log into the Aflac website, you literally click on the quote and enroll page, and it's only going to give you an option for final expense, MedSup, or an ancillary product. You would obviously choose final expense, and it'll go through the application just like everything that's on this paper application that I sent you guys there. Okay, and then we also have a demo video where we go through the entire e-app at Aflac, and I'll be sure to send this to everybody that's registered on the call today. But if you are looking to get contracted with Aflac, you can simply just reach out to us. Anybody here at Pinnacle, let us know that you want to get set up with Aflac. We'll go ahead and push the contract out. Or you can go on to our website, pfsinsurance.com, and you can simply just click on the contracting tab, which is all the way on the far right corner. You come to a page like this. If you're not with Pinnacle, you're going to want to hit contract now, because this will, get your, ask for your license, your E&O, and any training certificates that you have, just to get you in our system, and then we can get you set up with any company that we have. If you are already contracted with Pinnacle, on the same page right below here, there's actually like a little contract request form, and you just fill that out. You put your name, email address, and just say, hey, please get me contracted with Aflac. We'll get an email alert you're already in our system. We'll go ahead and push out that contract for you. What'll happen is you'll get an email with a link from Aflac for you to complete. Once you complete that, your appointment will be ready in about 1 to 2 business days. Okay. So again, I just want to kind of keep that short and sweet. I'll follow up with everybody that's on or that's registered on the call. I'll send you a copy of the slides as well as a copy of this recording, and then I'll also be sure to send you a copy of the video that goes through the Aflac e-app process, because it's a good 20 minutes, and I don't want to keep you guys on hold and everything. So certainly appreciate you guys taking the time today. Again, my name is Mark Bolger, Greg Yotis as well in the life annuity, final expense, and life or long-term care department. Here's all of our contact info and email addresses. Please feel free to reach out to us if you have any questions, or if you're working on a case, you need some help, anything we can do for you, please feel free to reach out. So thank you so much again, and hope everybody has a wonderful Labor Day weekend. Get some rest, and we'll hopefully be talking to you next week. Thanks so much, everyone. Bye-bye.
Don't forget to subscribe to catch the latest news in insurance and agent training. See you in the next video.